Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at how the DPs, our decision point levels, and our automatic setups work in conjunction, with an example from yesterday on the NQ. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. And in fact, we'll be looking at a losing trade in today's video. Right, let's just go over to a chart. This is a 3-minute chart of the NQ. This is using our RTH or regular trading hours. And I want to look at this TS3 Wave 3 trade setup that unfolded early in the day here. For you guys who are new to MTPredictor, although we have automatic setups on our charts, we don't just take these blindly because we know and understand that markets are random about half the time. In other words, half the time or slightly more, markets are not in a clear position to be able to do any kind of analysis. Therefore, you shouldn't be doing any trading when the markets are not clear. So the question arises, how do we know when the markets are clear? Well, for this we use a higher time frame chart. We use a time frame between 3 and 5 time frames higher. So for a 3-minute, we go out to the 15-minute. For a daily, you go out to the weekly. If you're, say, trading hourly Forex, you'd go out to the 4-hourly chart. I just want to use our training mode, our bar replay, and I want to jump back to before yesterday even opened. What we do is place our DPs on our chart on our higher time frame. So here was a previous high. We right mouse click, we do decision point. Can you see how that was on the chart in advance? If I turn training mode off, can you see what happened? The market on the previous day, because remember this is a day session only chart, regular trading hours, 9:30 to 4:15 in the afternoon New York time. You see how it made a high at that DP level. This set the large degree trend to down. It was then going down. So when you're on the shorter time frame chart, let's see how it looked. Here it was. There is your 15-minute resistance. You see how it caught the high the previous day. This then turned the large degree trend down. As such, our MTP trend turned from grey to red. Because the large degree trend was down, we'd then be looking for sell setups. So we'd be avoiding this VS buy. We'd then be looking for sell setups. You can see we had a history triangle here. So this was actually a sell setup that unfolded, or a setup that unfolded at the time. We never hide anything with MTPredictor. There's no point. If there's a valid trade setup at the time, and if I use our training mode, I'll just show you that there was a valid setup. So if I turn trading mode off, you can see how that would have been stopped out, and I'll put the analysis on in a second. But the important point, it left a history triangle there to show you that there was a trade setup at the time that was filled on the next bar, and therefore you can place the analysis on it to see what happened. So if I right mouse click here the red sell bar, do analysis, you can see this gave you a potential sell setup. Now this was quite a high risk. You can see here our position sizing, where we trade 2% of a sample $20,000 account, would mean that the risk would have been exceeded. So if you're trading the NQ contract, you wouldn't have been able to take this trade. This is the advantage of using position sizing, because it keeps your risks small and under control. And if the risk on a trade setup is too big, it wouldn't let you take the trade. If you're, say, trading the micros, you may well have then been able to do a trade, and that would have been a valid trade, and it would have been a loss. This is what we said in the risk disclaimer at the start: losses can and will and do unfold. So the purpose of this video will assume that this would have been a valid trade and you were in it, and it would have been a -1 hour loss. So that's why we use position sizing. So when you make a losing trade, it's a -1 hour or 1 risk unit loss. If I clear everything else off, you can see we had another setup that came in here, again a valid setup. If I right mouse click, do the analysis, again this would have allowed you to come into a trade. This time, because the risk was slightly smaller, with a sample $20,000 account and 2% initial risk, this would have allowed you to take one contract short. You can see your risk would have been approximately $365, ignoring slippage and commission. Again, if you're trading the micros, then you would have been able to take this one as well. The target was projected on the chart, and this was the area of where the target would have been on the chart. Our wave 3 trade is a trade where we're looking to take the wave 3, i.e. the strongest and longest and completed 5-wave sequence. In other words, we're looking to trade a big move for when it's right. We're looking to have then a large profit, not just in dollars but in risk reward units. But when we're wrong, as we saw earlier, we're looking to keep this initial risk small and under control. What I also want to show on the video is if we go back to the 15-minute chart and I go back to just after this sell setup was was taken on the shorter time frame. This was the last swing into the high. So you'd have right mouse click off this previous pivot low. This would have been area of support. Again, see how it's on the chart in advance. This is what we do with our DPs. They're leading indicators. They're there ready in advance for potential support or resistance if the market's going up. If we go back to the 3-minute chart, let's see what this means for the DP support zone here. As you can see, this is where the support zone would have been. So at the time, I just want to go back and just again use trailing mode. Sorry for jumping backwards and forwards, but if I use trailing mode and come back to here, this is our entry. But can you see how our projected target would have been in the area of the higher time frame support? So the two things were working together. So when you had the trade entry come in short there, you'd have had confidence that this was a good trade because the large degree trend was indicated to be down into this higher time frame support, and that was also where your shorter time frame target was on this wave 3 trade setup. So this is the purpose of this video, to show you how DPs can work in conjunction with your automatic trade setups to help identify trades. If I turn trading mode off, reset the chart, you can see that this gave you a very nice trade indeed, where you would have been short pretty much near the high of the day and you would have taken profits pretty much close to the low of the day. But the important thing is the profit would have been large. You can see here is our risk reward units of just over 9 times the initial risk. So what that means is when you did the previous trade, if you had been able to do that trade as I explained earlier in the video, if that had been taken, that would have been a -1R loss. So that loss would have been small. This profit would have been plus 9R, so it would have been large, not just in dollars, but large in relation to the previous loss. That's what we're looking to try and do with MTPredictor, not have a high percentage of winning trades. We think that's very difficult to achieve over the long run because markets are random half the time, but only to look to take trades where we can keep our initial risk small, so when the losses come through, and they will, every trading approach makes losses, the losses are kept small, but when the profits come through, the profits are large, but not just in dollars, in risk reward units, i.e. in relation to your previous losses. But also, the point of the video is to show you how our higher time frame DPs were on the chart in advance, and they gave areas of future support and resistance, and you can see how the reversal of this previous DP or higher time frame resistance area set the large degree trend to down. That gave you confidence to then to take short trades, and your target was in and around the higher time frame support zone, which again gave you confidence to run the trade down into that level. So hopefully this has been a good example of using our DPs on our higher time frame chart in conjunction with our shorter time frame trade setups to uncover potential trade setups. Again, this is when the picture is clear. So when the markets are not clear, on the YM there wasn't really any good clear trade setups, even though there was a sell at the high of the day. That was against our MTP trend. On the ES again had a very nice high at the 15-minute resistance. The market went down and came in and made the low of the day right at the 15-minute support, which is very nice. So the large degree trend would have been down, and that had a nice TS3 sell setup in the middle of the day there as well. So on this one the picture would have been clear. On the YM the picture wouldn't have been clear, so you'd have been avoiding it, and on the NQ the picture would have been really nice and clear, and as you can see that would have given you a good trade setup. So that's the essence of what we try to do when we are looking for analysis with the MTPredictor software. Remember, this is our standalone version here. We also have add-ons for NinjaTrader 8 as well as scripts for TradingView.